Hello and a warm welcome. You're watching India Tonight with me, Jude Sanath, and my colleague Shibani right here in our Mumbai studios. You know, Shibani, yesterday was all about that Fed meeting, and the rate today is largely dominated by geopolitical crisis, even as the West Asia story enters a whole new chapter. In fact, both geopolitically and macro data-wise, points are emerging from the United States dominating the market landscape this evening on India Tonight. After a brief lull, in fact, tensions between the US and Iran have escalated sharply. Over the past 48 hours, the US has launched powerful strikes on Iranian targets in retaliation to attacks on American bases in Jordan, thereby raising fears of a wider conflict in the West Asia region. The latest flashpoint comes from Egypt, where a drone attack set two ships ablaze at a Mediterranean port, including a US gas storage tanker. Now, this is the first attack on Egyptian territory linked to the current Iran conflict and raises fresh concerns over the security of the Suez Canal, one of the world's most powerful and most critical energy and trade routes.
Right. Now, of course, there is a fear of, the entire region now getting into the West Asia conflict. Now, meanwhile, global investors appear to be looking past the latest flare-up in West Asia. Well, at least for now, all three US benchmark indices are trading sharply higher after yesterday's sell-off under US Fed, in fact, maintained a status quo on the interest rates. Tech stocks are leading the rally, recovering from their week-long sell-offs, even as Nasdaq remains on track for its worst monthly performance since March. Geopolitical tensions, slowing economic data and resilient markets, these mixed signals are setting stage for our top story on India Tonight. To dissect this, we are now joined in by Santosh Rao. He's the head of research and partner, Manhattan Venture Partners. And we also have Karan Dutta, geopolitical and capital market strategist. Now, Mr. Rao, let's begin this conversation with you. We expected markets to react sharply. Now the entire region has been pulled into the conflict, including the likes of Egypt and then Saudi Arabia, of course, jumping in again. Tell us, the markets haven't reacted as per our expectations now because the conflict is ongoing for so many months. Is the market immune to some of the things and happenings of the West Asia right now?
Yeah, thanks for having me. I think the on again, off again situation, I think that's what's really spooking the market. There's a lingering feeling that it'll be settled at some point. Both countries want things to be settled. So I think that's the feeling. But if this escalates and widens more and more, at some point, we're going to cross the threshold and it's going to get very serious. At this point, it's still manageable, according to experts. So the oil is not a major issue at this point. So the cross signals, the mixed signals, that's what's really the big issue right now. In the US, the underlying economy is good, but then the Fed chair yesterday, there was a major disconnect between his rhetoric and what he wants to achieve. So there's some disconnect. Market is saying, what's going on? He's not going to get to 2% if he continues. So there are a lot of issues there. So the market is still very concerned. Today, we're getting a bounce back, but it's really not, we don't know yet. Let's wait for the earnings reports come out this week. Microsoft was good, Google was bad, things like that. So we need to know where AI is going, AI spend is going. So all those, so a lot of lingering issues, a lot of cross currents. So volatility is the name of the game. Uncertainty is the name of the game. So be very selective.
Uncertainty may well be the name of the game, like Santosh was mentioning there. But Karan, if I could come over to you now. In this big unknown that we possibly find ourselves in, are there certain sectors that investors must possibly watch out for that could see some movement, especially in the face of this uncertainty? And if yes, which sectors would those be?
Thanks a lot, Shibani and Jude, for having me over on the show. Before I kind of comment on the sectors, which I will, I just wanted to speak on the conflict itself, which seems on the face of it to be broadening. But if you take a step back and look at it overall, you'll notice that the Israelis are not involved right now in any form of attacks, nor are the Iranians hitting Israel. Plus, they're also not hitting UAE, Kuwait, or Qatar. So this is a very specific hit that the Iranians have started against US bases in Jordan, which is what the Americans are retaliating against. Uh, my reading is that this is restarted simply because of the upcoming midterm elections, for which Trump has his own ratings are beginning to fall, and the Iranians are trying to make it difficult for him. That having been said, coming to the core question about sectors, over the last few months and possibly given what's happened in the last year, we've been very, very positive on a couple of sectors, one being IT and definitely around pharma, auto ancillaries as well. So there are pockets of opportunities, in fact, pockets of large opportunities in India as well. And while we've been the worst performing market over the last couple of years, but my assessment is that over the next 2 to 3 years, India is poised for a phenomenal return to performance. And the leaders of that performance could be something like IT, pharma, auto ancillaries, and agriculture as well.
Right. Mr. Dutta, sticking with you, help us understand now. Again, there are fears of, because the entire region is in the conflict. Again, there are fears of oil crossing over $100 a barrel and even further. Now, will this finally, result into Fed hiking the rates if that eventually happens going forward?
So, Shibani, for a minute, we'll have to segregate the two issues because you've asked two separate questions. One is about oil, and then the other is about interest rates. If you look,
the
if you
general
look
fear
at
of inflation's.
yes,
Yes.
yes. I think if you look at the behavior of oil in itself, it should have spiked by now, but it is not. And we're now in a few months into the war. Now, this is almost the fifth or sixth month of the war. What is happening is that there is a replacement of oil supplies that is happening from the Americans. So the United States has become one of the largest suppliers of oil along with Venezuela. And for India specifically, our imports of crude from Russia have gone up substantially. And on top of it, India has become the fourth largest refiner of oil in the world. Hence, we're ending up exporting oil now. So these are some of the reasons why the prices of oil are not really going berserk, but which they should have gone by now. And which is the reason why inflation's not really seeping in, and probably one of the reasons why Fed's also holding off, for the same reason that the RBI is holding off as far as interest rates are concerned.
To come back to you for a bit, one of the main reasons why the Fed chose to maintain that hawkish hold on interest rates was also the task force that's been put together to take a look at AI, inflation, and other factors really plaguing the economy. But the fact remains that inflation in the US has cooled off for the month of June, even as the jury is out on how it will go about reacting to July itself, especially in the face of this conflict. What do you make of it, and what kind of an impact do you feel the uncertainty over inflation will have on the markets at large?
Yeah, I think that's for me, I'm guessing.
Yes,
So the rate of change, yes, the inflation has come down, the rate of change has come down, but it's still very high, way above the 2% target that the Fed is shooting for. So he cannot ease up on the gas pedal there. So he's going to maintain that. Inflation remains a target, and that's his single focus. He said that over and over again. So he's going to keep it there. And I think you can see with the bond market right now, the long rates are up steep, short rates are down because they know he's going to lower the short rates, at least from his talk. But the long rates, market knows the inflation is still high, so it's going to go up, and that really reflects the long rate, the inflation expectation. The long rates do. So I think that's what we're seeing. The steepening of the curve shows that the market is expecting down the road the rates to go up. So I think that's where we are. So he's going to continue there, and if he doesn't cut the next meeting, I think the market is going to be very skeptical. And with his whole talk that he's going to be aggressive about rates and inflation. So I think that's where we are. At this point, inflation is still sticky. He doesn't like that. The rate of change is improving, but it's just 1 month data. So he wants to wait and see the trend. And we'll see. Employment data is good, so that's good. And so there are a lot of inflationary forces out there. So he really cannot take his eyes off the inflation target at this point.
And which sectors will see the maximum impact going forward now this conflict has widened, Mr. Dutta?
Domestically in India?
Yes, and domestically in India and across the world as well.
Yeah, so I think I'll answer that. Let's go to the international markets first, and specifically the US. The one thing that bothers me as someone who studies markets is the extent of debt that is now being taken on by some of the largest names in the world. In fact, one of the things that I'd be worried about in the US would be the debt that companies like Google, Meta, etc., are now building on their books. It has never happened. This is unprecedented in history. In fact, some of the private equity transactions that are happening now are close-ended, and transactions on some of those funds are beginning to. The buyers are not being able to sell, etc. So this could lead to some form of liquidity crisis in the US. If you look at some of the markets that have done so well in the recent past, specifically in parts of Asia, you would have noticed that in the last 1 month itself, South Korea is down 40%, etc. Taiwan's taken a hit, while India has been kind of struggling for the last 18 months. But what the good news is that most of the macro indicators for India are starting to fall in place. So whether it is private investments or whether it is reserves or earnings growth, etc., all of them starting to look way better than what they were 18 months ago. So I'm reasonably confident that sectors such as IT, pharma, auto ancillaries, agriculture, parts of capital goods, etc., will start to show up. And it's very different from what is already part of the index. So if you notice, I didn't speak about financials out here.
Right. And before we end, Santosh, let me bring you in. I know you spoke about the uncertainty surrounding the geopolitical happenings of today, but that notwithstanding, do you see this as a short-term volatility event, or do you see something that it could fundamentally affect and alter market expectations for the rest of the year? Which one is it likely to be?
No, I think bear market is out of question. We're not expecting that. So it's a pause. It'll definitely come back up. Right now, it's just a question of rotation, coming back to going into sectors like industrials will do well, financials will do well, healthcare will do well. Those will ride out this volatility. But in the end, I think it's about money coming out of the very frothy AI sector into other areas. So the market is broadening. So you will see more and more of that. So overall, I think that we will end the year on a good note. At this point, there is some volatility, a lot of uncertainty because of the cross currents, but I think it'll settle down. I'm on this side of the equation where I think it's still bullish rather, and it will go up in the end because the underlying fundamentals are very good. We just need to control this inflation, and if the Fed can get everything together, I think we'll be right on track. So I think that's where we are at this point.
Mr. Rao, Mr. Dutta, thank you so much for joining us today on India Tonight and sharing your insights on the widening of the entire West Asia conflict and the impact on the global and the domestic markets. Thanks again.
Thank you.
Thank you.
Well, on that note, it is time for us to slip into a very short break. You don't go anywhere. We'll be right back.
Welcome back. You're watching India Tonight with me, Jude Sanath and Shibani Garat. Moving on now, PhonePe has launched Pulse Pro, an enterprise intelligence platform that uses aggregated and anonymized transaction trends to provide businesses with hyperlocal, near real-time market insights. The platform will offer data across more than 200 store categories and 100 market signals, helping businesses with expansion planning, distribution, site selection, and category growth.
Now, Tata Steel reported a mixed set of numbers for the first quarter, with revenue and EBITDA largely in line with the street estimates. However, profit after tax mixed expectations despite rising 12% year-on-year. Well, let's now, as sources tell ET now, that quick commerce platform Zepto has put its initial public offering on hold and is instead working on raising $105 million through a pre-IPO equity placement, according to sources. My colleague Anurag Joshi joins in with the exclusive details on this. Anurag, take us through this.
Online delivery platform Zepto has postponed its plans for an initial public offering after working on doing an IPO for months. And in fact, on July 21, Zepto had filed an updated red herring prospectus with SEBI and the exchanges. Meanwhile, Zepto is working on plans to raise $105 million through an equity placement, and this will be a pre-IPO placement of shares which will be solely to domestic investors. Zepto is in talks with financial institutions and family offices to raise the money, and this plan to raise money only from local investors is driven by Zepto's goal to remain an Indian-owned company that is having more than 50% local ownership. The company has plans put its IPO plans on a pause, and this followed a massive pushback Zepto received from investors in the IPO roadshow over the question of valuation. Now, until last year, Zepto's valuation was pegged around $7 billion. Now, in the roadshows, investors were not willing to move ahead with plans of participating in the IPO plan at a valuation over $3 billion. So the post-money valuation currently in the roadshow was pegged at around $3 billion post-money. This is a climb down from the valuation which Zepto had commanded until last year.
Moving on next, Paramount Communications says it sees strong potential in Madhya Pradesh's telecom manufacturing ecosystem. In fact, the managing director, Sandeep Agarwal, has said that the upcoming telecom manufacturing zone in Gwalior could be a game changer. Let's listen in.
Investing into 20 terawatt, which is equal to $200 billion of investment, which is only the beginning, I believe. So, I believe that our investment in Gwalior, if it happens, will be very nice, very good, and will add up to the Make in India initiative of the Government of India. Our first project is Narmadapuram. The infrastructure building has just started. So we are investing about 300 crores there. And the next plan, next phase could be Gwalior.
And how much investments are likely that?
So could be around 200 crores to 300 crores, depending on the land which is available. With approximately 10 crores per acre, because of the limitations. And but the best thing about cable industry is that the requirement of manpower is quite high. So I would say that for a 20-acre project, if I go, we would be having at least 500 or maybe if you have the indirect or the part-time employees which we'll be having, it could be about 700 people which we could employ there.
Day 7 of the Commonwealth Games was another successful medal outing for India with 3 more medals added to the tally. Athletics dominated the day as Murli Sri Shankar clinched silver in the men's long jump, while para-athletes Dilip Gavit and Mohammad Basil secured gold and silver respectively in the men's 100-meter T47. Meanwhile, Neeraj Chopra has comfortably qualified for javelin final with a throw of 79.61 meters, keeping India's hopes high for another gold alive. Now, India now has 15 medals, 3 gold, 9 silver and 3 bronze, and currently sit 8th on the medal table. So that's the exciting news coming in from Commonwealth Games, Jude.
Absolutely. And even as more than 250 of India's top technology leaders are set to gather in Jaipur for the 27th ET Edge CIO and Leader Conference, where the focus will be on agentic AI, the next evolution of enterprise AI that can act autonomously rather than simply assist. Now, the 4-day event will bring together CIOs, CTOs, and digital leaders to discuss AI governance, cybersecurity, deployment at scale, and how businesses can generate real returns from AI investments.
Now, up next, an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.